What's up, everybody? Derek Vandelander here. Welcome to Angel Trader Psychology Training. I first want to go over my story and what brought me to trading uh, before I actually start going over the actual course. So I started trading in January of 2016. I used to be a scaffolder. I built scaffolds. I hated my job so much. I was also a personal trainer. I owned a online personal training business as well. Um, I got laid off from my job, making about $200 an hour, right around December of 2015, right around Christmas time. Of course, that really only making that much money every day, you don't really get to save a lot. So I went to about 30 job interviews, and I applied for about every position I could. I just wanted a job. I just needed a job. Well, on the 30th job interview, I applied or I interviewed with this company 5 times, and I said to myself, I prayed about it. Said, if I don't get this job, I'm gonna start forex trading. What do you know? I don't get the job. Next thing you know, I'm in a forex MLM. I didn't do it for the MLM. I did it for the sole purpose to actually learn trading. My first couple months, I lost $3,500 that I did not have. I was at probably the lowest point of my life. I stopped in the MLM, but I was determined, absolutely determined to master forex trading. I loved doing it. I loved everything about it. I ended up reaching out to an ex Goldman Sachs trader from Chicago, and I'm not thinking that he would really pay much attention to me. He actually mentored me for a couple days. We got on in an interview, and he told me the back end of the forex market and what actually drives the market. And it really helped a lot of my psychology, and really made me understand what the actual forex market is. It was a truly amazing experience and has changed my life ever since. Going forward, I started using the TDI. I really loved how it worked. I solely just traded shark fins for the longest time, and I was trading shark fins on the higher time frames, looking at every pair. Now, of course, this isn't the way to do it, but that's how I was doing it. I was a newbie. I was doing pretty well with it. Um, Not as great as I would like, of course, but I was doing pretty well with it. Next thing you know, I started trading the lower time frames, the 1 and 5 minute, and I was trading shark fins on the lower time frames. Now this is around Brexit time, and the market was moving at a crazy pace. I was doing so well hitting the shark fins. The market would move 10 pips in a matter of seconds during this time. The volatility was nuts. I ended up turning $50 into $1,000, turning that $1,000 into $2,000. I ended up switching brokers, and I turned that $2,000 into $23,000 in around 16 to 17 trading days. And I have this all documented on my FX book. Uh, Now this was at the point where I had added Bollinger Bands to my chart. And the going from the 2000 to the 23,000 was absolutely lucky. It could have ended far worse. What happened was I was on a webinar with one of my clients. I was doing a live trading session with him, and I did not have the news indicator on my chart. Now this looked like a good setup. I was talking him through the setup. Next thing you know, I placed 2 trades. 20 seconds later, News hits, spikes up 200 pips. I end up making around 9 grand in that 20 seconds. So I went from about 4 grand to 13 grand in that day. It was absolutely crazy, and I was very lucky. It could have ended the opposite direction, blown my account. From there on out, I actually, evolved this strategy into something that is truly amazing. And if you guys seen my FX book, I haven't really taken a huge loss in quite some time, and I can show you if you'd like. I actually ended up, just perfecting this strategy, adding things, adding the triple Bollinger Bands, and of course, watching the patterns happen over and over. This strategy is so easy for being able to visualize what patterns happen. It's really a crazy thing, and of course this has taken me so much back testing and times of just looking at the charts and not even trading. It's really taken me a long time to really perfect what I do with this strategy and what I do with this trading. My biggest issue going into trading was that I was over leveraging my account. A lot of these brokers give you that, oh, let's do 1 to 1,000 leverage. You can make thousands of dollars off a $100 account. That is the easiest way to lose money. Now, at this time, I only use about 1 to 50 leverage. I can hold easily 1,500 pips of drawdown when I enter 3 times on a trade. The biggest thing that will stop you from being successful in Forex is over leveraging your account. I truly advise and believe that you should not be focusing on money in trading right now. For your first year, focus on solely your percentages. I only go for about 3% a day. Sometimes I get more, sometimes I get less, but I'm focused on merely percentages. When you start focusing on money and you get this mentality of, oh, I need to make double my account today. I'm going to double my account here. I'm going to make all this money. That is not going to keep you to being a successful Forex trader. I promise you. You should be really focusing on only percentages. If you do this for 1 year, I promise you that your trading account and your trading will be so much better than it would if you focus on money in the next year. I've been through some very tough times. Right now, it's obviously great, and this is due to the way I do things. I gave my heart to Forex trading, and I still to this day study and back test and look at the charts, and if I get drawdown on a trade, I study why I got drawdown. This is something I recommend to all of you. This is something that has helped my trading. Every time I do a new training for you guys, it helps my trading. It makes me see things that I maybe have not seen before. I'm a master at pattern recognition, and if you hear from some of the big time traders, a lot of them tell you pattern recognition is huge. The market moves in patterns. So for me, being able to recognize these patterns that happen over and over again has helped my trading immensely. Alright guys, well, I'm going to get on to the actual course. Again, welcome and thank you for being here. I can't wait to really help you with this new venture that you guys are taking on. What is the definition of trading psychology? The emotions and mental state that dictate success or failure in trading securities. Trading psychology refers to the aspects of an individual's mental makeup that help determine whether he or she will be successful in buying and selling securities for a profit. Trading psychology is as important as the other attributes, such as knowledge, experience, and skill in determining trading success. Discipline and risk-taking are two of the most critical aspects of trading psychology, since a trader's implementation of these aspects is critical to the success of his or her trading plan, while fear and greed are the two most commonly known emotions associated with trading psychology. Other emotions that drive trading behavior are hope and regret. Here's some of the psychological trading issues you may have. Fear of being stopped out or fear of taking a loss. The usual reason for this is that the trader fears failure and feels that he can't take another loss. The trader's ego is at stake. Now again, this happened, over leveraging your account has so much to do with fear of being lost. You're not going to fear losing as much as if you're not over leveraging your account. If you're only risking 1%, you can easily get that 1% back if you lose that trade. Getting out of trades too early, relieving anxiety by closing a position, fear of position reversal, and as a result feeling let down, need for instant gratification. So here's the biggest problem that some of you guys have is you need to trust the system. You need to backtest and see what works in the system. I've given you all the tools to study the system and study the trading material. But you have to actually trust the plan. By doing that, it's going to be backtesting and seeing that the trading plan works. Some of you guys get out of trades with less than a pip just because you don't want to lose money. You got to really start focusing on a different aspect of thinking than losing money. Adding on to a losing position. This can be a huge downfall to your trading. It's unwilling to admit your trade is wrong and hoping that it will come back. Again, the ego is at stake. Wishing and hoping, not wanting to take control or responsibility for the trade. Inability to accept the current market situation. A lot of people wish that the market's gonna, go in their way when they take a trade, and when it's in drawdown, they're hoping that it's going to reverse. You can't be thinking that way. You just have to stick to a certain trading plan. If it doesn't work out, go on to the next one. Compulsive trading, drawn to the excitement of the markets, presence of addiction and gambling issues, needing to feel you are in the game. I have so many clients that just want to trade. Oh, I missed this trade. I missed that trade. You got to really focus on the trades that are highly profitable. You don't need to take every trade. A lot of learning is going to be you watching trades that played out, that you knew that were going to play out, going right. That's going to help your psychology of trading. Limiting profits, feeling you don't deserve to be successful, to have money or make profits. Usually psychological issues such as poor self-esteem. Not following your proven trading system. You don't really believe it works. You did not test it well. It doesn't match your personality. You want more excitement in your trading. You don't trust your ability to choose a successful system. Now I promise you guys, this is a very successful system. You just got to take the time to really study it, perfect it, and follow the plan. If you only give 10% to this system, it's only going to give 10% back. You got to if you really want this to work out, you have to give your 100% to it, 150%. You got to back test, you got to study, you got to watch trades happen. Overthinking your trades, second guessing your trading signals, fear of loss or being wrong, wanting a sure thing where sure things don't exist. Not understanding the fact that loss is part of trading and outcome of each trade is unknown. Not accepting the fact that trading imposes risk. Not accepting the unknown. The market can do whatever it wants to do. It doesn't have to follow the rules. You need to be aware of that. not trading the correct position size, dreaming that the trade will only be profitable, not fully recognizing the risk and not understanding the importance of money management, refusing to take responsibility for managing your risk. Like I said, I go for 3% a day. I do not over leverage my account. I can hold probably 2,000 pips of drawdown pretty easily. Trading in excess, need to conquer the market, greed, trying to get even with the market for a previous loss, the excitement of trading. Now guys, what you need to do is if you lose a trade, one, you need to step away. So many people get so worked up after they lose a trade. You need to take a step away, get your serotonin levels back up, do something you like to do, and then when you're ready, you can get back in your trading chair. After you get back in your trading chair, figure out why you lost. Study your loss and don't let your loss happen again in that setup. Being afraid to trade. No trading system in place. Not comfortable with risk and the unknown. Fear of total loss, fear of ridicule. Now, if you're afraid of losing money in trading, this isn't right for you. You need to get out. You need to realize that there's always risk in trading Forex. Always. Irritable after trading day. Emotional roller coaster caused by anger, fear, and greed. Giving too much attention to trading results and not enough attention to the process itself and to learning the skills of trading. So many people get so focused on a day of bad trading, or maybe they're not understanding the market. Well, how long have you actually studied the market, studied the trading system that you have? Stop focusing on too much money. Stop having unrealistic trading expectations. Now, if you're in the market for a month, you cannot expect to trade like me. It takes time. When trading with money you can't afford to lose, or trading with borrowed money, last hope for success, trying to be successful at something, fear of losing your chance for the opportunity, no discipline, greed, and desperation. Now, if you're trading with money you cannot afford to lose, you need to get out now. You need to have a secure form of income, because when you're trading with money that you can't afford to lose, your psychology is already whack. I recommend trading demo for a year, saving $200, $300, $400 a month. At the end of that year, when you perfect your trading on demo, put in that $300, $400 a month that you saved up in that year, and then watch your trading just blossom. Accepting loss. The first reason why traders lose may seem obvious, but in reality it stems from long-term social conditioning. The inability to accept loss. Loss generates powerful emotions such as fear, uncertainty, apprehension, and self-doubt. We are socially conditioned to succeed from the moment we enter the world. We are brought up to become achievers, influenced by family, friends, education, and career environment. We are encouraged to seek professions such as doctors, lawyers, and bankers, striving to be right, number one and the best, always seeking perfection. The solution is to take a reality check. Losing is part of the game. The possibility to lose is always there. Bottom line, traders do lose. The how much and how often is what distinguishes great traders from those who will always struggle. You can learn how to accept losses by redefining the meaning of loss. If you equate it with failure, it will sooner or later take its toll. But redefining it with help, you will move forward, improve your trades, and cope with losses. Consider losing as a positive. In that sense, it will improve your next trades. Find something new. Make the mistakes on a blip on the radar. Don't overreact and let it come and go with ease. Loss psychology. The difference between Professional traders and those who are just getting started is the ability to handle the emotions associated with realizing a loss. Holding a losing position can cripple a rookie investor because many decide to hold and hope that their currency will come back to their entry price. The worst case scenario is if the investor sells when the stock has reached a bottom. Trading not to lose is fear-based trading. As traders, we want to have respect for the market, but not fear it. It's neither our ally nor our enemy. It's a neutral sea of both potential and risk. Trading out of fear means we are too focused on the risk side and are unlikely to capitalize fully on the other aspect of the market. In general, fear can cloud judgment. In real time, the trader may be so afraid to lose that they don't even see the opportunities occurring. If you continually see trades that you should have taken based on your trading plan, only in hindsight, fear may be causing you to actually filter out information and cloud your perception. As traders, it is our job to come up with or learn a strategy, develop a trading plan that rigorously tests that plan for profitability and our ability to personally implement the plan. My personality and circumstances may allow me to implement a plan that you can't, and vice versa. I can easily initiate my mind to take a trade on the 1 minute chart, but some of you maybe need more time to actually understand what's going on in the market, and it takes more time for your brain to wrap up and then taking the trade. Maybe you should be trading the higher time frames, and I recommend, if you're not going to trade the 1 or 5, then you can look at more than one or two pairs. Look at 3 or 4 pairs. Now for me, I only look at one pair. I trade the 1 minute chart on GJ. Occasionally I'll look at UJ or UE, sorry, EU, excuse me. But there's not going to be as much setups on one pair if you're trading the 15 or the 30 minute chart. On the 1 minute or the 5 minute, there's usually plenty of setups. Once we have a plan, our goal is to trade according to that proven plan. A plan is which is researched, back tested, and or traded in a demo account, and then traded live with small amounts of capital until the plan is proven successful. Wins and losses take care of themselves, and while we are actually trading, we can't care about wins and losses. We only care about following our plan and trading every valid opportunity our plan is giving us. Greed and fear in the Forex market. After trading for some time, you begin to feel confident. Greed creeps in, you enlarge your positions in order to make more money. Risk what risk? You neglect the larger risk as you only see larger profits. This is the fast lane to erasing your account. Many traders tend to enlarge their position size at a disproportionate manner, at sizes that are much larger than the profit they gained in their accounts. Now guys, I get asked a lot why I'm only trading 6 or 7 lots on a $100,000 account. Well, because I can hold much more drawdown. I'm not over leveraging my account. I'm very happy with 3% on my account every day. I'm not going to be greedy, and I never will be. With money management rules forgotten, liquidating the account can happen within a few bad trades. Do not over leverage. Okay, so with your modest $5,000 balance that might not be life-changing, $250 a week, but what happens when you compound $5,000 over a year? 5,000 times 1.552 equals 63,214. That's a return of over 1,260% without even risking more than 1%. Now work out the return for the following year. You can get rich relatively quick through trading, but it doesn't happen overnight. It happens over hundreds, if not thousands, of systematic, high probability and low risk trades. In order to get rich quick, you have to be patient. If you truly want to satisfy your greed, keep it in check. Are you guys ready to take the next step in your Forex trading? Here's my advice to you if you are new or struggling in Forex. I challenge you for 1 year, focus on percentages and not money at all. People's biggest fails in Forex is over leveraging an account. For reference, my account, when I'm trading, I can hold a drawdown of well over 1,300 pips. I aim for roughly 3% a day. Often I get more, often I get less. When you focus on money, you're setting yourself up to fail. People think that this is a get rich quick thing, which is most definitely untrue. Really focus on building your account slowly and do not fall for the let's double your account every day mentality. You will notice that by not over leveraging, it will ease your stress and emotions while trading, but it will also improve your overall trading. Respect the market and watch it respect you back with money. Thank you guys for watching my psychology training. If you have any questions or any advice that you need, please feel free to come at me. I'm always here to help you out. Also, stay up in the chat. I say it every time. The chat can help you very much. Again, I hope you guys all have a great week trading. Great rest of the year trading. Let's get to it.